Robert T. Kiyosaki, Rich Dads Who Took My Money, Why Slow Investors Lose and Fast Money Wins. Embark on a journey to financial independence with Robert T. Kiyosaki's Rich Dads Who Took My Money. Delve into the crucial financial concepts necessary for attaining your desired financial goals. Discover the power investing approach of using multiple asset classes, and why investing for cash flow rather than capital gains is critical. With relevant examples and relatable anecdotes, Kiyosaki provides a roadmap to a successful investment strategy, guiding you towards making smarter, calculated decisions in your financial life.
Why money matters. Saving for retirement, the key message of the book, can help people reap the rewards of their golden years. The idea of putting off money worries until old age is not sound because without a decent pension, many will have to work longer and with living expenses that retire might not even be an option. The author emphasizes that individuals should work towards financial independence early in their money-earning years. Traditional financial advice of saving and long-term investment isn't enough to reach financial independence quickly or reliably, but the book will provide alternative ways to achieve this goal. The Art of Power Investing. Investing in paper assets like mutual funds is comfortable and easy, but it's not the way to build wealth. If you want to be financially free, you need to be a power investor, and that means combining several asset classes, including business or real estate. The author's key message is that the best way to become rich is through power investing, and Bill Gates is an excellent example of this approach. Gates built a successful business with Microsoft and then invested in its stock, which created a synergy effect. A successful power investor builds synergy between different asset classes, generating wealth over a shorter time than investing only in mutual funds. A rich portfolio of diversified stocks or mutual funds is a good start but not enough to build up substantial wealth. To become a power investor, you need to integrate different assets in your investment portfolio, including real estate or business assets, as combining them can create something more significant than the sum of their parts. Invest for cash flow. In Investing in Cash Flow Assets, the author shares a vital lesson on investing. Rather than focusing on capital gains, one should prioritize cash flow. This message is highlighted through the analogy of a cattle rancher and a dairy farmer. The former sells their cows for meat and gains a one-time profit, while the latter milks their cows and continues earning as long as the cows produce. Similarly, one should seek assets that generate profits through rents, dividends, or business profits, and keep earning long after they've paid for themselves. Unfortunately, most investors focus on capital gains, which is an easy way out, but the author believes that this is a recipe for bitter disappointment. By investing in cash flow assets and holding them for the long term, one can ensure a steady stream of income and minimize the risks of exposing their investments to the cowboys of the stock market. Don't leave your money on the table. In his book, the author shares his experience of winning and losing money while gambling in Las Vegas. He highlights the importance of taking one's own money off the table early, like professional gamblers and investors do. Investors should sell their investment once they've made a profit and move on to new opportunities. The goal is to achieve a snowball effect with one's money to accrue wealth. Using other people's money to invest is the best way to do this. Finally, the author stresses that leaving one's own money on the table for too long puts investors at risk of significant losses in the next market crash. Seeing the world from a banker's perspective. In this book, the author shares a valuable lesson he learned about money from his friend's rich dad. You should approach potential investments and borrowing money from a banker's perspective. The bankers require insurance on the money they lend and need to see financial statements and credit ratings before lending any money. Similarly, you should perform due diligence on potential investments and protect them against possible risks. By seeing the world from the banker's perspective, you can exponentially increase your investments and build wealth. Achieving financial independence. Achieving financial independence is not a walk in the park. According to this book, one must combine different asset classes, create a constant flow of income and move money around instead of letting it sit idle. The book highlights 4 major reasons why people don't achieve financial independence. Firstly, people hardly succeed because they have the "I can't" mentality. Secondly, most people think investing should be easy when in reality, it takes active investment to achieve great returns. Thirdly, it's easy to fall for traps set by the rich, such as high fee charges by mutual fund managers. Lastly, many people invest without guarantee that their money will still be there when they need it. To achieve financial independence, one should maintain an active approach to investing and work hard towards their goals to succeed.
In conclusion, Rich Dads Who Took My Money provides insightful guidance on building wealth and achieving financial independence. The book emphasizes the importance of power investing, combining different asset classes such as real estate and business. By focusing on cash flow rather than capital gains, Kiyosaki steers readers away from commonplace financial pitfalls. Furthermore, the key elements to making informed investment decisions include adopting a banker's perspective and understanding the reasons for financial failures. With the knowledge gleaned from this book, you will be well equipped to forge your own path towards a financially secure future.